Hi, everybody. This is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profits. I am joined by Rafi Farber, who, in my opinion, is an expert in terms of looking at what's going on in the world and tying it with what's happening in the world of commodities. And that's what we're going to be talking about in this video.
Take the first step towards online privacy. Get NordVPN.
Get the Crypto.com Visa card. You can use this wherever Visa is accepted all over the world. Make sure you use my link to get a $25 bonus when you register. Link in the description below. Hey, Rafi. Rafi, thank you so much for making yourself available.
Hey, Rich, my pleasure. Glad to be back on.
Yes, and I think this is our third video because we've done a couple before. One was about a conversation about Bitcoin, and then another. I think a couple of months ago we were talking about commodities and stuff. So it's great to have you back on. Do you just want to say a little bit about your service and what you offer and what you do? And I'll have the links in the description below.
Yeah, sure. My newsletter is the Endgame Investor. Basically, it's to protect people from the endgame, which I think is the collapse of the dollar and all fiat currencies, and what you should do to prepare. And I take an emotional, balanced approach to trading. I don't go all in on anything, not even all in on gold and silver, which is my focus, because I believe everyone, no matter how much they hate fiat cash, needs to have some, reserves in order to be able to buy dips. Because people say, "Oh, I'm going to buy the dip, I'm going to sell the rally," and then it comes and you can't do it because it's too emotionally scary. And finding the right stocks. Just one small example is we just saw what happened in nickel last week, and we saw a big nickel mining company that should have gone way up on the nickel squeeze, gone way down because they were hedged against nickel. So I go into which mining companies are in error hedged against a rise in the price of gold in a similar way, and they could be in trouble. And these are things that a lot of people can just pass over because you don't look into a 10K, you don't see what a company's actually doing. So these are some of the things we cover.
Right, and you're on Odyssey and YouTube and Twitter, and you also have a newsletter, the Endgame Investor. Do you want to say something about
that? The newsletter is the Endgame Investor, and it's a daily commentary. We go into it's mostly monetary analysis from an Austrian school economics perspective. I come from the Misesian school, Ludwig von Mises, Murray Rothbard, those kinds of economists, and I subscribe to Austrian school economic theory, the Austrian business school. The Austrian business cycle, and so if you're into more of a philosophical bent on economic analysis, then I'm your guy. And I also have a Patreon where I go into biblical commentary and its intersection with economics. And for those who are interested in what I believe is the Bible's opinion on economics and money, then that would be interesting for you as well.
Yes. Like I said, I'll have the links in the description below. So please go ahead, check it out, and go and subscribe. Because I think you give 2 weeks free, right?
Yeah.
Yeah, and people can try it out. Okay. Now, I have learned a lot from you. And listening to you, Rafi, I have a confession to make. So I am very, very politically, historically, very, very left-wing. Right. I used to go on demonstrations, anti-racist demonstrations, anti-apartheid demonstrations, anti-war demonstrations, and I'd be walking along with members of the Socialist Workers' Party, and I found them right wing. And one of the things that's happened these last couple of years, and perhaps even slowly before, I'm getting more and more and more and more awake and alert and informed about the difference between our debt-based monetary slavery system and the principles of Austrian economics. I can't say I'm in any way learned. I've not read Rothbard or Mises or any of these people, but I've learned from you. I've learned from Tom Luongo, and I get that it is a value transfer between people, and where people are free to engage in that economic activity, then societies flourish. And when governments comes bearing down, saying how it should be, then people in society suffer, and that is so evident increasingly over these last few years. And I think you'd agree with me is that we are in the accelerated phase of the dollar collapse.
Yeah,
it's going to go bye-bye. And one of the markers for that is what's happening with commodities, and in particular what's happening with gold and silver, and like you said, what happened with nickel. Now, when you in your videos, you do pay attention to the commodity markets. And I've learned a lot because the stuff that goes on in the commodity markets, I think, is very, very specialized, very important as an indicator of what's happening in the economy in general, and ignored. It is ignored. Like I know a few months ago, the London Metals Exchange ran out of physical copper. That's a really big deal. I know that's a really, really big deal. You don't have physical copper? Oh my God. And nothing on the mainstream media.
Yeah.
Yeah. So do you want to say where you think where we are right now, and what do you think's rolling out with reference to particular commodity markets? I mean, really, the floor is yours, Rafi.
Okay. Well, I mean, I'll begin by saying I'm not an expert in any given commodity market. It's not like I know about the nickel market and the usages of nickel and all, the battery supply and how much and supply. And that's not my expertise. I don't know about the copper markets particularly. I don't know about the lumber markets. What I know about is money. I understand. I understand the final psychological process of when people say enough of this dollar, enough of these pounds, enough of these euros, and I'm just going to put my wealth into real assets, whatever they may be. If I'm a nickel company, I'm just going to buy a bunch of nickel. If I'm a copper company, I'll buy a bunch of copper because I don't know when I'm going to get any. And when everyone scrambles for these types of moves at the same time, that's a currency collapse. And it happens not really in stocks; it happens in commodities. Like if you go back to 1923 in Weimar, we're almost 99 years ago. Next year will be the centennial of the Weimar hyperinflation. If you go back and you see what actually happened in 1922, 1923, then stock prices did rise. That's true if you pick the right ones. But compared to commodities, chiefly gold and silver in Weimar, they basically did nothing. I mean, you still lost a lot of value in real terms. So what happens at the end of an inflationary scheme is that commodities go crazy, and chiefly gold and silver, because those are the money commodities. And I try to break everything down to very, very simple principles. People overthink economics. They overthink everything. But economics is just trade between humans. Everyone has different values. Everyone values everything differently. And whether it can be, you can call it religious values, you can call it economic values. Some people want a big house, some people want a small house. Some people eat a lot of food, some people eat cheap food, some people, whatever. I mean, everybody wants different things. And the way you divide resources between you is you need a money commodity. Otherwise, you have no division of labor. You can't really trade directly with each other. So you need a commodity to do that. And it's as simple as that. And people want to divide a barter economy and say a barter economy is one thing and a monetary economy is another thing. It's not really that. It looks that way. It looks like you could, make a dichotomy between those things and say, oh, now we're in a money economy because we have a money, which is this different thing. But it's not a different thing. A money is just another commodity of all the other commodities. The only thing that makes it a money, or what we call colloquially a money, is that it happens to be that you can divide it well and use it, to trade different things. But it's the same as trading a chicken for a pickle. I mean, it's just more convenient.
That's amazing. I've never heard that argument before, and it makes so much sense, right? That money and in this possibly fiat currency pretending to be money is another commodity. And actually, I could say that fiat dollars or pounds or euros are another commodity, one that's increasingly worthless. But people exchange and transact with.
Right. This is also what I try to simplify, and even among my colleagues in the Austrian school, I think I'm not like high up in the academic circles of this movement or anything. I don't have any degrees, and I don't want any degrees. I don't want anything to do with academia. But
my kids have never been to school; they're home educated.
Yeah.
Just
mine too now.
Right. Oh, good.
I had to pull my kids out of the schools because of the testing and the isolation they had from not taking certain medications, if you want to call them medications or whatever. So what I try to emphasize is that dollars, pounds, euros, all this stuff, it's not that it's pretending to be money. There is gold and silver, which is money, and then there are substitutes for that money. Like how was the dollar born? How was the pound born? How did these things start? It started by people had gold and silver. They had it in their pockets, coins. They traded with each other for goods and services. And then somebody said, you know what, this is really heavy. Let me give it to my friend over here who's going to give me a piece of paper. to tell people that he has my money, and then I can trade that piece of paper, and then whoever goes back with it to him, he can get the money. So it wasn't like these things were actually money. It's not like people believed that they were money. They were just substitutes for the money that they had. That's how they came into existence. And so I'm saying, still today, right now, when you trade a pound or a dollar or a yen or a euro for a good and a service, what you're really trading is the gold and silver value of that currency. That's what you're doing. It's just, you just don't realize it, because people are so used to trading the paper or trading the digital substitute for that paper, or in my view, and we can argue about this later, or trading the blockchain substitute for the digital substitute for the paper substitute for the money, which is where I think it comes in. So it's all just derivatives upon derivatives upon derivatives of gold and silver, which were the original two monies. Gold for like big transactions and silver for smaller transactions. So what people don't realize today is that when the currencies collapse, when they do collapse to zero, by definition, that means that the gold and silver value of them will go to zero, and the value of gold and silver in those terms will go to infinity. Doesn't mean that a gold coin will have an infinite value. It won't. You'll just have to price goods and services in terms of that gold or silver coin instead of in terms of dollars or pounds or yens or euro. But that's what happens empirically in every single hyperinflation that's ever happened. Like the currency goes to zero, and the value of gold and silver in those currency terms goes to infinity, and then people just run for the actual money, and they go back through the chain, through the historical chain of transactions to the original money. It just happens every time. Yeah. And if you want a small taste of what I do in terms of the biblical stuff, I just discovered this. Not that I discovered it, I knew it for many years because I've studied these books in religious Orthodox yeshivas and stuff. But the 13th century scholar Maimonides, I'm not sure if you're familiar with him. He was very influenced by Greek thought and Thomas Aquinas, the Catholic. I think he was Catholic. So those two were. Thomas Aquinas was very influenced by Maimonides, who I call the Rambam. So he has a whole section on the laws of idolatry, right? On bowing down to idols, what you can't do. And okay, so when he opens that section, he opens it with a short history of idolatry. How did it develop? How did it happen? How did this happen where people started bowing down to like statues and thinking they were gods? The whole thing just seems crazy. Why would they do that? So he says, it didn't really start that way. It started, with a guy named Enosh, who's in the early generations in the Bible, and he started saying, you know what, these stars and the moon and the sun, they're really, really powerful, and God created them, and God wants us to, say thank you to the sun and the stars and whatever, and offer animals to them because they're God's helpers, and we want to honor God, and we're gonna sacrifice this lamb to the star, whatever, right? And then generations went by, and then people started saying, oh, you know what, the star is too far away. We need a statue to represent the star, and we don't think the statue is God, but it's going to represent the star, which is going to represent God because it's a middleman. So it's the same process. And then generations go by, and then all the people know is that they're bowing down to this idol, and they say it's God, and they get confused they forget that there was an original God, and now they think that this statue is God, and they totally lost the plot. Right, so it starts as substitutes and substitutes of substitutes. But then now you have this argument: what is money? Is gold money? Is the paper money? Is the digital thing in your bank account money? Is crypto money? And nobody knows. It's like this. It's just like what happened with the idolatrous with idol worship in the early human history. What's God? Is the statue God? Is the star God? And everybody forgets there's one source of it all. So it's the same. It started out as a substitute. Idol started out as a divine substitute because God was too far away. And now they don't even know what God is anymore. So paper started out as a money substitute, and now nobody knows what money is. But eventually, when it all collapses, they're going to go back to the original.
Okay. Now you said something earlier about gold and silver rising when there's a currency collapse. Mm-hmm. Now, I do think that we are in that accelerated process, but gold and silver aren't rising. And I think that's because of the naked shorting, where they're just producing more and more and more certificates in order to keep the price down. I think there was a couple of weeks ago where $1 billion worth of silver shorts were produced to slam the price of silver down. But what's happening in the other commodity markets? And I do get what you said, that you're not a commodity expert, but I do think you pay attention to it to show what's showing up in the money markets.
Right. So what's happening in all these commodities is that the prices for their delivery now, for immediate delivery for the spot contracts, is higher than for the delivery in the future, which means that people aren't trusting that the supply is actually there, and they're calling for delivery now. That's called backwardation. It's happening in pretty much every single commodity except for gold and silver, because once you have backwardation in gold and silver, that is when the dollar collapses. Because you can't have backwardation in money itself, or else the money that you're trading the commodity in is actually, it's dead. So what's happening in gold and silver with the extra shorts that are slamming down the price. In gold and silver, it's easier to do that. That is happening in nickel, which is why we saw a huge short squeeze. That's why it happened, because you have more paper than you have physical. If it was 1-to-1, you wouldn't have these short squeezes.
Right.
Right. So in gold and silver, it's easier to accomplish that because you don't need the physical gold and silver supply. Because gold and silver, they function both as industrial commodities to an extent. Gold is very minimally an industrial commodity, but it is still an industrial commodity. There are industries that need it. And silver is more of an industrial commodity, but they also have a monetary price. And the monetary price is the full honest monetary price of gold and silver is the 100% backing ratio between a given central bank's currency, a given central bank's balance sheet, and its gold reserves. That's at what point will its gold reserves 100% back every currency unit out there. And for the dollar, it's something between $40,000 and $50,000 an ounce now. But since you don't need the actual stuff for the money, you can just trade substitutes for it. Then it's easier to suppress the monetary price because it would be harder to suppress an industrial price, because for an industrial price, you actually need the stuff.
Yeah.
Which is why you don't see really a short squeeze so much in other commodities. In oil, sometimes you can see it in nickel if there's like this one company that has way more shorts than it has nickel available, which is what happened. So those things will be revealed. And but then when gold and silver go into backwardation, you'll see all of the prices of other commodities just head towards infinity. And then you'll have gold and silver trading directly for the other commodities, and then you'll have a reestablished price scheme in terms of the real money. That's the end game.
Okay. All right. And then are there any, actually, how's it playing out with platinum and palladium? I know they're industrial metals, but they also have some sort of monetary value as monetary commodities, although they've never really been used as money the way that gold and silver have been, as far as I know.
Right. But platinum, palladium, they're not really money commodities. They can serve that way in an emergency. Like in hyperinflation, platinum, palladium, and Weimar also, traded for a premium, because if you couldn't get gold and silver, the next best ones were platinum and palladium, even though they don't really have a monetary history. Platinum's only been around since the 19th century, and palladium is even newer. And the reason they're going crazy is because Russia produces 40, 50% of the world's palladium, maybe even higher. So it's a very illiquid commodity. There's very little in stock. And there isn't that much paper shorting over the supply, because again, it doesn't really have a monetary price. But these are very speculative things that the price discovery is very difficult because the supply is so low, and what's going on where most of them are produced is very unstable right now.
Right. Because so like copper, you need physical supply of platinum and palladium. Because who wants to buy? What electrician wants paper copper? I'm going to make wires out of paper copper. Okay.
Yeah.
Now, we live in a far too interesting time, and where we have, I think, Russia is the only European nation that's self-sufficient in food, self-sufficient in energy, self-sufficient in defense arms procurement, and also self-sufficient in commodities, pretty much. Mm-hmm. So how do you see the commodities playing out with regards to the sanctions that are being imposed by Europe and the Europe and the US with Russia, and then also the agreements that Russia is making? I don't know if you saw yesterday, there was an announcement by the Eurasian group, I'm not sure of the name, that they're going to create a currency that's backed by commodities. Are you familiar? Did you see that?
No, I didn't see that, but I wouldn't trust it.
Okay, say more about that.
What's the news that some kind of Central European authority is going to make a commodity-backed currency?
Eurasian, I know Russia and a few other Asian countries are going to look at having a commodity-backed currency.
I hope they don't, because if they do that, then eventually they're gonna corrupt it, just like the West corrupted. And any central power that makes a central currency is a big bad mistake. You don't want that. I don't trust Putin. I don't trust Xi Jinping. Certainly, I don't trust Boris Johnson. I don't trust Joe Biden. None of them. I don't want any of them in charge of any of this stuff. But with Russia being
Rafi, I agree with you, but unfortunately, right now they get to say.
No, they don't really get to say it. I don't think they get to say it, because because look, we're about to have like a massive loss of confidence in the world reserve currency and the dollar, and building up that confidence took hundreds of years. I mean, since the collapse of the continental dollar in early continental history in the United States, the dollar was built up through confidence until FDR stole the entire gold supply and backed the dollar with it, and then slowly inflated it, and then the confidence has been eroding. But once the dollar collapses, it's not like some other central authority or Eurasian or Xi Jinping or something is going to be able to say, "Oh, now trust me. Here's this new currency, and you can trust, and everything is going to be fine with it." Now, you can't just build trust up like that.
Right.
The world has to go through the entire world has been based on theft of one from the other for at least 50 years, and arguably a lot longer than that. But you can only steal from each other for so long until everything collapses. So when the dollar collapses, I don't think China or Russia is going to be able to step in and say, "Oh, now I'm the world power and just follow me, and now I'll be the next America and everything will be fine." No, it's everything's going to fall. The question is, who's going to survive the fall and who's not.
Right.
So even you say like Russia is self-sufficient in this, self-sufficient in that. Maybe, I mean, that seems right, but then again, like Venezuela is self-sufficient in oil. They have so many reserves, but they can't dig any of it out of the ground because they don't have money that works. So under the current conditions of a sort of functioning monetary system, yeah, you could say that Russia's self-sufficient in this and that and the other thing. I mean, it looks that way, but like when the monetary system changes, the question is, how are these resources going to be divided up now? And yeah, it looks like Russia's in a better situation because they have much less debt and they do have a lot more commodities in the ground. The question is, can they dig them up profitably and have a functioning economy? Yeah, they could, but it's going to be hard on them, just like it's going to be hard on the West. And the West is going to have to restructure a lot more fundamentally because of all the debt they have.
Yeah.
Whereas Russia might have a relatively easier time. That doesn't mean that everyone in Russia is going to be fine and there's not going to be starvation and it's not going to be hard. It's going to be hard for them too.
Okay, very good, very good. All right, thank you. And then in terms of the dollar collapse, where do you see we're at right now? How long have we got?
How long have we got? Well, if we talked on March 6th and you said, "Well, Rafi, how do you think the nickel markets are doing?" And I was like, "I don't know. It looks all right. It's fine." And then all of a sudden, wham! Like 250% higher, and all these brokerages are going bankrupt, and the LME has to reverse trades. That they have to steal $1.3 billion from people in order to keep it going. I wouldn't have known that. Like, no, I'm convinced that one of these days, it could be any day, really. We're going to wake up, and the dollar index is going to be down 10 to 20%, and gold's going to be through the roof, up thousands of dollars overnight. Nobody's going to know why. And but we'll know why generally, but what's the exact trigger? I don't know. Maybe it's going to be an inflation report. Maybe it's going to be the Fed backing off on its rate hike. It could be anything. But it's that unstable that at this point the entire world is a nickel market, and any day everything could just go.
Okay. And any particular things to look out for? Any things that you're noticing that we haven't mentioned?
I would keep my eye on 10-year, 20-year, 30-year treasury rates, because those are the assets of last resort. In every financial crisis, those long-term bonds, they get really bid, really high, and the Fed goes after them and starts buying them like crazy. But they've run out of notes to buy. There isn't much left. So this financial crisis, once the Fed steps in one last time, that should be the end. So I've been looking at high yield bonds. There's an ETF, HYG, I think, high yield corporate bonds, and that's starting to sink. It sunk a lot in 2008. It sunk a lot in 2020, and each time the Fed rescued it. But I don't think they have any ammo left to rescue it this time. So the next time the Fed moves into the markets, I think that'll be the trigger. But the thing is, what triggers them to do that? Some kind of headline at a zero hedge about credit spreads or something.
Right. Because we're recording this on the 15th of. It's the 15th of March today, right? And
the Ides of March, yeah.
FOMC meeting, and then on the 16th they're going to announce whether they're going to raise interest rates or not.
Yeah, that should be tomorrow.
Yeah, and what they've been signposting for months and months now is they're going to tighten. They're going to raise interest rates. They're going to raise interest rates. So we shall see. Okay, Rafi, anything else you want to say before we finish up?
Anything else I want to say? Yeah, I mean, look, this is going to be a trying time for everyone. People who are prepared, the people who are not prepared, it's going to be worse. But we're not. When I first came into this game, 10 years ago or so, when I met Ron Paul, and I didn't meet him, he got me into the whole red pill sort of way of looking at the world. And I imagine, oh, I'm gonna protect myself and my family, and then I'll be rich and I'll be able to help out, and everything will be fine. It's not going to be a walk in the park for anybody. I mean, there's going to be food supply problems. If you're able to buy food, you're going to need connections. We're already seeing food supply chains break down all over the world, and exports being banned by Brazil. I think today stopped exporting soybean meal, and wheat exports have stopped from Russia, and barley. I mean, this is only going to get worse. We all see the direction things are going in. So grow food, have some real money with you. Whether you think it's some Bitcoin or gold and silver, you should probably have both if you believe in both. I would focus on gold and silver, but I'm not against having some cryptocurrency if it could work. I don't know for sure.
Yeah, no, I get it. It's useful to be diversified. Food,
Yeah.
Bitcoin, privacy, cryptocurrencies.
Yeah, and stay as calm as you can, and keep your family close. This is going to be a rough ride for all of humanity, and they're going to need calm people to take over once the evil cabal realizes they have no idea what they're doing.
Yep. And you just reminded me of something that I want to ask you. And I do think that they are going to fail. They're going to hurt a lot of people along the way, but they are going to fail. But you're in the Middle East.
Yeah.
I understand there've already been food protests in Iraq. Ukraine exports its grains to the Middle East. And they've said there's not going to be any grain exports this year, and there may not be any farming of it because of the conflict. Russia's saying that they're going to limit their exports, and they're not exporting any fertilizer, certainly to Europe. And Belarus is saying the same. And then Hungary has said we're keeping our grain to ourselves. So what we're going to have is more and more disruption, civil unrest, especially in the Middle East, because they get a lot of their grain from the Ukraine. So how do you see that playing out, given what happened a few years ago with the Arab Spring?
You mean what's going to happen with the Arabs? I don't know. Their societies are notoriously unstable. Maybe not their societies, but their regimes. I mean, they're always tenuous, and they can, flare up at any time. But like I think the biggest importer of grain in the world is Egypt. Yeah. They have a lot of people to feed, and they don't have anything growing. I mean, Israel, thank God, where I am is we grow a lot of our own food, and I'm surrounded in the Golan by a bunch of food. Just to the north of me, Syria is not so lucky. I wouldn't even call it lucky, but here at least there's the government is horrible here, but at least it's slightly less powerful than, say, Assad or somebody one of these people. But yeah, I think there's going to be a lot of starvation in these countries, and it's going to be hard to watch. And I don't know. I hope they get through it, and they don't bother us over here. There's not much else I can say.
Yep. No, I got it. And thank you for that. And Egypt is very large population, very little agricultural land, and it doesn't have the sort of wealth that Saudi Arabia has, that it can then, it doesn't produce black gold in the way that Saudi Arabia that it can afford to buy food. So hairy times indeed. Rafi, thank you so much. I'm going to have the links in the description below, and do check Rafi's work out. I found it incredibly informative and educational. If you have any comments or questions, put them in the description below. Please come and follow me on Odyssey, because I think I'm being shadow banned on both my YouTube channels, which must be a first, right? And you can find me on Twitter, CryptoRichYT. You can also follow Rafi on Twitter, and you can also, I have a weekly podcast, and I'll have that link in the description below. And between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Rich and Crypto Rafi signing out. All the best. Bye-bye.